Yeah, so I do think we're on the verge of a big bull cycle in commodities. In fact, I've talked about, and we'll talk about this in a little bit, the gold chart and how it's borderline breaking a triple top. I've talked about how the 1970s chart is very similar to what we're seeing in gold here. 1970s gold had a 9x in that period. So I think gold especially, I think the other metals as well, although some of the other metals are somewhat an industrial metal as well, and I think that's a little bit of an issue, just because if we do see a global recession, that obviously could take a little bit of demand away. But I do believe that we're on a verge of an overall big move in the commodity space.
Bitcoin is at 10-week lows, but one longtime analyst is telling investors to ignore the panic. In a Twitter update on May 25th, Philip Swift, creator of data resource Look Into Bitcoin and co-founder of trading suite Decentrader, eyed a BTC price breakout still in progress. Hello and welcome to Money Talks. In today's video, Gareth Soloway shared with us his prediction for gold in the Fed's next move and how it will impact the economy and the crypto industry.
Yeah, so exposure wise, there's a couple ways. So I'm a big believer in having some physical metal on hand. You don't need a lot, but the way I look at it is if we wake up one morning and the grid is down and the banks are closed and our credit cards don't work, maybe we don't have any cash on us, then you have physical gold as a way of buying things in that type of world. So you don't need a lot of that, but it's kind of like just I sleep better at night having some physical gold and silver on hand. The other side of the coin would be that we're at this point where you have the charts signaling this bigger move to the upside. And again, I love being able to show these charts here. And just for everyone else out there, in terms of what I play on a swing trade basis. So if I'm trading gold, I'm usually using the GLD, or if I want the miners, the GDX. And again, the GLD is the ETF that tracks gold. The GDX tracks the miners. So that enables me to get in and out. If you're buying physical gold, it's not the best thing to constantly sell it and then buy it back and sell it and buy it back. It's more of a long-term kind of pass it down to my kids if I don't need it type deal. But when we look at the gold chart, I want to show you this. So number one, if we zoom out on this chart, you had the move up from 2018 to 2020. From 2020 to basically the end of 2022, we went sideways to lower. Now, in technical analysis, this up move followed by this choppy consolidation, that's a bullish pattern. That's known as a bull flag. Since 2023, we've seen gold starting to take off. It reattacked a triple top. Essentially, we have 1, 2, 3 hits. Triple tops notoriously cause pullbacks, which is what we're seeing now, but they're shallow pullbacks, usually with a breakout that follows. So I do think that within a month or two, we are above this level. And I think by the end of 2023, we're probably looking at $2,300 per ounce gold. And I think even north of 4,000 on gold by the end of 2024. Last thing I'll show you guys on this is my favorite chart to show. And I'm just going to get rid of these trend lines so that it can be as crystal clear to everyone as possible. But if we go to our weekly chart, we can go back to the period of the 1970s, which was really the last time we had inflation that was kind of out of control, right? And what we saw in the 1970s was this up move for 2 years, from 73 to 75, then this consolidation from 75 to 77, and then look at the bull run that took place after that. And the reason I bring this to our attention is because the only way we can predict the future is by looking at what happened in the past based on the same factors that are occurring, right? And generally we see history, if not repeat, at least it rhymes. And so this mega move, in my opinion, this is what we're starting to get into on gold. And if we go back to the current time on gold, the same sort of pattern. Here's your 2 years up, your consolidation, and now you're getting ready for that bigger move that should take us up. Now, in all fairness, I don't want to get people too excited here. I don't see gold doing a 9x like it did in the 70s. Back then you didn't have Bitcoin as a potential alternative and other things like that. But do I think it can do a 3x in the next few years? Yeah, I do. Absolutely.
A lot of panics in the market today, Swift summarized. BTC USD is currently testing the metal of key moving averages against a backdrop of traders' downside targets extending to $25,000 and below. Even Swift believes that Bitcoin could still return to as low as $20,000 in the coming months, despite remaining bullish on higher timeframes. Nonetheless, when looking at realized price, the picture is clear when it comes to Bitcoin's long-term strength. Zooming out, Bitcoin is actually performing well and as expected for this stage of the cycle. A clear BTC breakout above realized price, he added. An accompanying chart showed the cycles Swift refers to, these beginning each time the spot price breaks above the realized price line. In each case, the real BTC USD upside kicked in 140 days afterward.
Yeah, so I would be shocked if the Fed can engineer a soft landing, and I think the best indicator is looking historically at the Fed, and the Fed is always late to the punch. Whether it was in '09, they waited way too long to come out and kind of backstop things and start quantitative easing. And then even when inflation was starting to roar, they were telling everyone it was transitory. It obviously wasn't, as we all know. And then they had to play catch up by jacking interest rates up so quickly that now we're seeing bank failures, right? So this is something that the Fed has shown over and over again, that they're not they're not good at predicting the real outcome. And so when they talk about a soft landing, or Janet Yellen saying a soft landing, the Fed saying a mild recession, I just have a hard time believing it because their track record is so poor in predicting the actual outcome. So for me, I'd be much more apt to prepare for something worse than what they're saying. And then if it doesn't happen, great, but at least you're prepared.
Another glimmer of hope comes from trader activity this week. As noted by Checkmate, lead on-chain analyst at Glassnode, market participants are increasingly showing signs of exhaustion. Checkmate referenced the sell-side risk ratio metric, which is now approaching its lowest ever recorded levels. Despite realized price lying far below the spot, no one is interested in selling at current prices, he inferred, whether or not they are in profit on their particular investment. This usually occurs when sellers are exhausted on both sides, suggesting big moves are coming. Part of comments on May 24th read, "The sell-side risk was last this low in late 2015, at the beginning of Bitcoin's run to its previous halving cycle's all-time highs of $20,000 in December 2017.
First thing that I want to tell people is to become a trader, it is extremely hard. It's 90% discipline and mental kind of focus. And then the other side is learning the charts to be able to trade off of them. The learning part is easy. Anyone can learn. The hardest thing is to be disciplined enough to not get caught chasing positions, to not get in too early, to not get yourself in trouble. And when you do get in trouble, how do you manage that? Versus the common theme for investors is, and I've done this before in my career, is like, if you're buying something as an investment, you're like, oh, I'm down 10% on it, no big deal. As a trader, that's not okay. You can't allow that to happen. So there's this difference in mindset that comes when you're a trader versus an investor, and it takes some work. There's no doubt about it. It takes a lot of self-reflection, discipline, continually hammering in lessons over and over again. When you make mistakes, you have to learn from them, because in the trading game, it costs you a lot of money. It's not like you can just be like, oh, that was a mistake, I'll just hold it for the next 10 years. It may take up most of your buying power as a trader, and then you can't do other trades that make you money in the meantime. So the biggest thing, again, is that just understand that it's 90% up here, and it's so hard to do, but it is achievable. It just takes a lot of work.
So, is it a good time to invest in Bitcoin, and what's your prediction for Bitcoin in 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.